cash and credit deferred revenue. And next year, what would you do when you recognize it? Debit deferred revenue and credit revenue. Yep, got it? Debit deferred revenue and credit revenue, right? That would be next year when it's available or it's been earned. And there's the example. They spend $75,000, but they also need to recognize the revenue. Do you see that? Two entries being made. One to recognize the expenditure and the other to recognize the revenue. Because deferred revenue shows up on the balance sheet. The statements are pretty much the same. You have the balance sheet, statement of revenues, expenditures, and changes in fund balance. And then, if the fund meets the definition of a major fund, if not, show it as other governmental funds. I think one of the CAFR exercises requires you to identify special revenue funds. So if it's a major fund, it will show up on the governmental fund balance sheet and the statement of revenue expenditures. It will show up see this? This could be a special revenue fund. This could be a special revenue fund. Could be any major fund. And if it's not a major fund, where would it go? Here. Got it? General fund always shows up by itself. All the other governmental funds that I talked to you, if it's major, shows up here. Now, there is a little thing to this, which is a government can designate a fund as major even if it doesn't meet the definition, if they think it's important enough. They can designate it that it's a major fund, even if it doesn't meet the definition. But on the reverse side, if a fund meets the major fund definition, you can't make it non-major. So if it meets the test, you don't have the option of saying, no, it's not a major fund. But if it doesn't meet the test, you have the option to say it. So that's the difference. Okay? All right. Now let me, our last topic is really about exchange